Climate action cannot wait. On the 5th anniversary of the Paris Agreement, we see the world at a turning point where climate commitments need to be made a reality by scaling up climate finance to the point where all new investments support low-emission and climate-resilient economic growth, COVID recovery, and job creation. The Green Climate Fund was created by the UNFCCC to provide climate finance for developing countries. We play a crucial role in serving the Paris Agreement, supporting the objective of keeping global average temperatures rise well below 2 degrees Celsius. To date, GCF has committed $7.3 billion to support 159 projects that help cut emissions and build the capacity of communities to adapt to climate change in 117 countries. In doing so, we have leveraged $16 billion in co-financing from private sector, governments, and other development and investment funds. Thanks to our work with our 100 partners, these investments will support over 400 million beneficiaries with increased climate resilience and avoid the equivalent of 1.2 billion tons of greenhouse gas emissions. Last year, the fund was successfully replenished by near $10 billion, which allows us to increase our programming resources for the current GCF1 period to deliver even higher climate impact. The world needs much greater climate finance flows to achieve net zero emissions by 2050. We need nothing short of a global financial transition, aligning both public and private funding towards a low-emission, climate-resilient pathway. There are huge opportunities, but there are also significant barriers to overcome. For the public sector, COVID-19 creates the need for green investment to revive economies. However, developing countries do not have the resources to create the kind of COVID recovery plans that G20 countries have put in place. For the private sector, there is great potential, particularly for infrastructure investment in developing countries. But there are also barriers. On the supply side, market risk is still misaligned with climate reality, and on the demand side, entrepreneurs face a range of policy, institutional, technical barriers to convert investment opportunities into bankable climate projects. Green Climate Fund has identified 6 initiatives that are needed to overcome these barriers and catalyze climate investments in developing countries. Here is what we think is needed and what GCF is doing to contribute to the solutions. First, we need to leverage nationally determined contributions into integrated climate policies and investment plans. Next, assets must be repriced in global financial markets. Third, we need to create new climate-focused financial products, such as green asset-backed securities or resilient bonds to help developing countries to access institutional finance. Fourth, blended finance needs to be reinvented so that it works better for least developed countries and small island developing states. Next, we need to strengthen the capacity of public development banks to drive climate action. Finally, it is essential to create innovative financial instruments and financial structures to increase access to climate finance in developing countries. As we reach the 5th anniversary of the Paris Agreement, it is even more urgent to support the climate ambition of developing countries. The Green Climate Fund is committed to supporting the global financial transition that can make this happen. Together, we can raise climate ambition and empower climate action.